Anyways, theta. What is theta? Time. So this is kind of broken down a little different instead of having blanket definitions. So theta is known as time decay. Time decay. And theta is time in Greek, right?
Theta is time decay. So theta gives you your expected change in option price given changes in time. Yeah. So for short options, it kind of gives you an estimate for like your expected daily P&L basically.
Yeah. Time decay. Theta represents the rate of decay in any option's value as time passes. So Julie, whenever you're getting into a position, is theta something you pay attention to heavily? Is it something you kind of just glance at? How do you go about theta?
I usually I look at portfolio theta. That's helpful for me because I think there's a section about this in the book, and I think it's like one of the most helpful sections actually, which is like, how do you decide whether to add or subtract new positions? You're trying to balance a portfolio. What do you use? The theta ratio, which is your portfolio theta divided by your net lick, I think is like the most helpful metric for that, because if you're collecting a lot of theta, it might mean that you're actually subjected to excess risk. If you're not collecting a lot of theta, it could mean that you're not actually taking enough risk. Like you're just exposing yourself to a whole bunch of outlier risk without like collecting enough to compensate for that. So that's kind of like one thing that I tend to look at when it comes to like adding, subtracting new positions. But when it comes to like the trade setup on an individual basis, I don't look at theta a whole ton.
Yeah.
Do you?
No, not really. That's why I was kind of just wondering. I know everybody kind of has their own mental process or checklist they kind of subconsciously go through whenever they send an order through, but theta is not really one I pay too much attention to. Daily erosion, it measures how much an option's price decreases with the passage of one day, assuming all other factors remain constant. And like Julia just mentioned, she really likes to keep an eye on portfolio theta. So if we think about it in that way, then it measures how much the option prices in your entire portfolio would decrease with the passage of a day. Non-linear decay, theta is not linear. It accelerates as the expiration date approaches, especially for options nearing expiration. So this is where it gets a little tricky whenever you're dabbling with 0 DTE options, because it's something to pay attention to. That theta is really going to accelerate, especially in those shorter dated options. And then trading 0 DTEs within like the last hour or two, like that's definitely something to keep in mind. But
that's when your theta starts to like break. That's when like the outputs just stop making sense. So but it's helpful to know, I guess, especially when you're like, do I put on this position, this other position? The thing is too, like market and risks are efficient. So if you have high theta, it means you just have risks that are, high elsewhere. So if you're expected to collect a decent amount, it means that you're taking on risks somewhere else. So theta can tell you a little bit about both, to be honest, which is something that I like about it.
Oh, good point. Intrinsic value versus extrinsic value. Whenever I think of intrinsic value, all that comes in my mind is Mike and his whiteboard. Just like the first year, just Mike always saying intrinsic value. That's what I think of. But theta primarily affects the extrinsic value of an option, which is a portion of its price not attributable to intrinsic value. And that makes sense when we think about it, because if there's two components that create extrinsic value, which is time and volatility, we know that theta is time decay. So that's why it would only affect the extrinsic value portion of the option rather than the intrinsic value. Anything to add on that one, Julia?
No, man, that's a good summary of it. Yeah.
Oh, dope. Higher for at the money options. Theta is typically higher for at the money options compared to in the money or out of the money options. Another thing it doesn't mention on here though, it's constant. It's constant. So we could always roll our positions, add a little bit more time, but time never stops. So they're always losing value. Even if you can't see the value in the options price change, the price of the option could even increase, but the time value still go down because maybe volatility is expanding. Yeah. And maybe you can't see that theta is still, ticking. So it varies with volatility. So theta is influenced by implied volatility. Higher volatility generally leads to higher theta, as there's more uncertainty about the option's future value. You kind of touched on this next one, Julie, but impacts on strategies. So traders utilizing option strategies need to consider theta, especially when employing strategies that involve time decay, such as selling options. So we kind of just talked about on the first slide, like, is theta something you kind of take a peek at before you send a trade through? And I feel like it ties into this a little bit, because it's like, know the impacts of theta on your position, but at the same time, I feel like it's easy to not have to look at it, I guess, when you're sending a trade through, because can't we automatically assume theta could be decent depending on if we're even collecting enough credit on the trade before we even send it through?
That's true.
So it's like with time sensitivity touches on gamma a little bit. So theta highlights the sensitivity of option prices to time, making it crucial for traders to manage their positions based on time decay. Is that saying anything towards gamma a little bit indirectly, or how would you approach this third one, Julia?
So with this one, so for time sensitivity, I don't know if you would like manage a trade according to theta, but like I could totally see you managing a trade according to gamma.
Yeah.
Like when your gamma gets so high that you're like, no, it's too volatile, it's too short term for me, whatever. Like that would make sense to me. But theta, I think like it's helpful to look at. The other thing that's helpful is that like you can look at the theta of a portfolio because the units are all the same, but you can't look at the gamma of a portfolio, right? You can't look at like what your overall portfolio sensitivity is to gamma, because like the delta of, an option on one underlying is in different units, right? $1 in Apple, change in Apple is different than $1 change in Amazon, right?
Yeah.
So we can beta weight deltas, we can't beta weight gammas. So the theta portfolio theta, it's not exactly, but it gives you like a good sense of like, okay, how much gamma am I overall exposed to, even though I can't reliably look at a Greek like that. So that's why I would mostly look at like portfolio theta is like probably what I would look at when it comes to like, should I manage?
Yeah.
And then on a position basis, I'd look at gamma more probably than theta for management.
Yeah. You first kind of touched on paying attention when your gamma is too high. What is too high? Is that a metric? Is that based off of your personal comfortability? What do you take into account when you think about too high for gamma?
I think it's mostly based on your personal comfort level. Yeah, and it's also like it depends on the market a little bit.
Yeah.
Like, I think, okay, there was a really big move, but I'm expecting a reversion. I'm willing to take a little bit more gamma on this trade compared to something that's just had gamma creeping up, consistently, and now it's too high, kind of thing. So it depends on the market a bit, I think.
Cool. No, that makes a lot of sense. Diminishing returns, theta can get pretty repetitive because it's pretty straightforward. But as expiration approaches again, theta accelerates, leading to diminishing returns for option buyers, potentially increased profits for option sellers. So that's why whenever you're trading 0 DTE options or just any options for that matter, whenever you're buying them, when you turn into a bag holder, you're really at the mercy of time, because when you turn into a bag holder, maybe you get in a position that kind of, just gets out of hand, or you weren't able to manage your risk and you're kind of stuck bag holding. That's the one thing when it comes to buying the options. You're such at mercy of time, because as each day passes, it's obviously losing some value because of time decay, and then that's where you'll see those diminishing returns.
Yeah.
But, if you're an option seller and stock is just trending within a range forever, it can be frustrating to not see the market go anywhere.
Yeah.
But it is a little comforting to know that you're benefiting from time decay as time passes, even if you're not getting that move.
Yeah, which is nice. And that kind of goes to show like the trade-off, like the rationale of the trade-off, where like the short sellers, right? Like you have a high pop, and a big part of that is because of time decay.
Yeah.
Like, because like that is not, that's guaranteed, right? Like that, the value part of the value is going to decay with time. The other side of the profitability is like changes in implied volatility, but you can't necessarily depend on that. But like time decay is a more dependable metric, right? But obviously that depends on a whole bunch of other factors. Compared to like other ways that short options generate profit, like the theta one, it's just kind of built into it. And that kind of goes to show why, like where that rationale is, like why, when you have these tail risks, but you also have this profitability, and part of that is just because gamma is just built into how option dynamics work, which is kind of cool.
No, that makes a lot of sense. Theta decay curve, Julia. That's why sometimes I like looking at those theta decay curves and just visual components of whatever I'm looking at, because with the theta decay curve, it's visualized as a curve with time decay accelerating closer to its expiration. So it kind of just helps me piece together the data, which is just numbers and understanding. And then when I see the visual of it, it just makes so much sense, understanding, how how you see diminishing returns and how you see theta decay actually work throughout the duration of the lifespan of the option contract. But that's what I was going to ask you. Are you more of a visual type of person? Do you like seeing those bell curves? Do you like seeing those any type of curves, or how does your brain work?
Yeah, I'm visual. Like as a trader, like a lot of what we do is based on intuition. And a picture is just worth 1,000 statistics. That's something I like to say. So.
I like that. That's a fire like slogan or something. Like if you had, that's dope.
I like that. Well, that's what I use, right? Because I'm like, I could show you a numerical value of what your theta is versus time, right? But if you see like a curve and it just goes like, then it sinks in. Like it makes a lot more intuitive sense, I think. So like visualization, I think is like one of the most important parts, like the most important first step when it comes to like quant trading, especially. And you got to be able to see what kind of data you're working with. Otherwise, you might use the wrong tool, for example, or the right, like the wrong statistic or the wrong analytical method. I could go on, but yeah.
100%. That's all we got for theta. Just a quick touch up on theta. It's a pretty straightforward Greek. I want to say it's too complicated to understand.